Good morning, my monster drinkers, and welcome back to the show. I was just thinking this morning, it's a nice, calm, orderly world we live in, right? I mean, global markets are a serene picture of stability, and politicians are making sensible, well funded decisions with our money, and everything is just fine. April Fools. Except it's still January. And over across our western front in the land of the rising sun, they've decided to kick off 2026 by playing a little game of financial Jenga with a wrecking ball. So let's talk about Japan. For decades, it's been a quiet, predictable corner of the global economy. Low inflation, low interest rates, a government that buys its own debt like it's collecting Pokemon cards. But maybe this house of cards finally reached a point of instability. Maybe they got bored of stability. I don't know. Overnight, over the weekend, really, we saw the Japanese government bond market, the JGB, that's Juliet Golf Bravo. Well, it didn't just crack a little bit, it started imploding. We're talking about a 6 standard deviation event. Now, for those that slept through statistics class and haven't really listened to me about this, that's kind of like the statistical equivalent of a unicorn riding a unicycle on a tightrope through an active volcano. It's statistically not supposed to happen. So, what gives? What happened? Well, our main character, we knew it was going to be exciting when she took over. Prime Minister Takaichi. Probably murdered that, I'm sure, with my East Tennessee accent. And she's in a bit of a political pickle right now. She decided to go full-on populist. First female elected prime minister. And she called a snap election and is promising everybody a pony if they show up and vote. Or, in this case, a 2-year suspension of the 8% tax that they have on food. I mean, who doesn't love cheap groceries, right? The only tiny, insignificant little detail that she forgot to mention is that how she's going to cover the shortfall, how they're going to pay for an 8% holiday on food for 2 years. And this is what the pros and, I guess the, mainstream media, financial pundits or whatever, it's what they call the Liz Truss moment. Remember her, the Prime Minister of Great Britain, who lasted about as long as a carton of milk? She tried the same thing. Unfunded tax cuts. The bond market threw a temper tantrum of epic proportions in the United Kingdom. Well, Japan's bond vigilantes saw Takaichi's plan and said, "Hold my sake, baby." They started dumping Japanese government bonds like they were a radioactive hot potato. And when everybody sells, the price crashes. The yield, the interest rate the government has to pay soars, skyrockets. We're talking about the 40-year bond yield blasting past 4% for the first time ever in Japan. This kind of puts the Bank of Japan in a world of trouble, let's say. They have 2 options here. And it's like horrible and more horrible, or horribler and horribler, and both terrible, in other words. One option, do nothing. let the market burn down, let borrowing costs go through the roof, and watch the Japanese economy pretty much grind to a halt. Option number 2, step in, start printing money like, hey, we've done in the past. There's no tomorrow. Let's buy up all the unwanted bonds. And this is the infamous Japanese yield curve control. They've done this before. The problem here, this turns Japanese yen into the equivalent of confetti at a birthday party. Not worth a whole lot after the show. So, opportunity, right? How do you find opportunity in the chaos? Well, for savvy traders, a crisis is just an opportunity in disguise, as usual. You can short Japan. iShares MSCI Japan ETF, ticker that we might all know and love, or maybe you've never heard of it, EWJ. It's Echo Whiskey Juliet. It's a basket of the biggest Japanese companies. If you think Takaichi's fiscal kamikaze mission is going to end badly for that Japanese economy, well, you can always bet against it. And then there's a leveraged ETF that gives you 3 times the inverse exposure. That's for the real thrill seekers out there. I'll leave that one to go find on your own. Second, the currency play. If you believe the Bank of Japan will be forced to choose option number 2, fire up the printing press, well, yen is probably going to get smacked in the face. Maybe even with a hammer, a sledgehammer. A weaker yen means a stronger dollar, at least relative to the yen. And this is a direct bet on Bank of Japan's desperation to control the yield curve. Third, and this is a class, that FXY would be the way to play that. Foxtrot, X-ray, Yankee. Number 3, the old classic reason, gold. We keep hitting new highs, making the top of the list again today. We're already seeing it as Japan's crisis sends shockwaves through the global financial system. It's kind of funny that Buffett, before he left office or left CEO position, was pushing their cash pile into Japanese yen, and here we go, yen exploding like a rocket ship. So, gold just keeps going higher as we see these shockwaves. Investors are flocking to the safety of gold. It's not just China. It's not just Japan. Worldwide, we're seeing central banks dump dollars, move to gold. Gold is taken over as the highest reserve asset that most central banks hold. It now exceeds the dollar, if you missed that report. This is kind of like the financial world's cockroach. Gold survives everything. Gold has been money. Gold is already pushing through $4,800 an ounce. It was $4,700 yesterday. $4,750 was and now we're touching $4,800 overnight. It's not sexy, but it's a safe harbor in this global fiat storm. And keep an eye on treasuries. Japan is the biggest foreign holder of U.S. debt right now, and if they need to raise cash, they might dump our bonds, which would push our rates higher, which is not going to be popular with a certain person that loves to post on social media. I was trying to make sure I didn't say something. So there you got it. A political drama in Japan is creating financial earthquakes for the global economy. It's a story of ambition, denial, and the cold hard reality of the bond market math. For those paying attention, story of opportunity. So stay frosty out there. We're going to dive into some charts, kind of check out what's happening today. try to figure out where some opportunity might be in these markets. Stick around to the end. I'll go through the gamma exposure and kind of read the tea leaves where I think the options are trying to push us. So anyway, I guess before we talk any type of trades or charts, pop on over here. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation, it's kind of intended to be informational, educational, fun. Hopefully there's some entertaining value to it. It's not really a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade any of those financial instruments, you probably will lose money. Statistically speaking, 90% of people that buy anything lose money. It's just kind of the way it is. So be careful out there. If you want somebody to tell you what to do, hire and consult somebody. I'm just a dude on YouTube. I get lucky. I make money. I'm trying to share some of that with everybody. Here we are in the 21st. You know, man, had President Trump firing up the speaking mic there a few minutes ago at Davos over there in Zurich, and I don't know. Does it matter what they say at Davos? I don't think so, even though Jim Cramer been tweeting all morning about how important it is, but I don't think it matters a hill of beans. I don't make any decisions for my trading based on what they say. I just make decisions based on the price action. So tomorrow, we're likely to get some final GDP. Thought we were supposed to get some PCE this week, but not seeing that show up in here. Yeah, there it is. Core PCE. That ought to be interesting. Coming out tomorrow. 10 a.m. after the market opens. That's a bold move right there. Put the PCE out after the market's open. Usually we get that before the market opens. That'll be interesting. So GDP in the pre-market and then PCE after the market opens. Could be a volatile day tomorrow. That's what that says. So the FOMC meeting coming up tomorrow, coming up next week, right here, 2 p.m. Set your calendar, set your alarm. If you day trade, watch out. We've got this coming in hot, right there next week. Do they cut? Do they not cut? Do cuts even matter? You know, it's kind of been a leading indicator that we might have some financial problems by cutting a lot. Supreme Court punted again yesterday. Somebody was saying it's the first time they've ever punted something 3 times in a row. I don't know how true that is, but delayed releasing the decision yet again against the tariffs. Will they ever vote on the tariffs? I don't know. Not sure I care. And let's see. Do they have anything? Are we voting on rate cut, rate pop? I don't even see that in here for next week. Seems like that would be on here. There we go. Fed decision in January. Looks like we've got no change is the popular vote. 98%. So you threw a few bucks in a cut. That'd be interesting if they actually cut. So it looks like the Fed's signaling no cut, no increase, no cut. Now, what'll be interesting is if Europe goes nuclear and dumps $4 trillion worth of U.S. debt, it would pump DGS2 like crazy, and then we'd have to raise rates to catch up to it. So this is a black swan type event. If Trump keeps pressuring for Greenland, and Europe decides to dump treasuries or bonds, that can cause DGS2 to spike, and then we'd have to raise the Fed rate to go catch up with it. I can't make the story up. I mean, I had no story behind what would cause this, but that's a possible reason. And if Bank of Japan dumped bonds, we could also see this go shooting up. And then we'd have to raise rates again. And then possibly cause that financial crisis. This could be exciting times here. Black swan events piling up. So the reason there would be no cut or no raise is because these two are sitting at the same level right here. There's no room to cut. Right there. I was looking at the betting markets first, but there's no room to cut. If they cut, they'll be below the market rate. Getting below the market rate is dangerous because then if the market rate keeps going like this and you've got to, in 6 weeks, you got to raise, then you look like an idiot. Why'd you cut and then have to raise right back? So when they get close to the current rate, which if you didn't know, DGS2 is basically the market's rate for the Fed rate. Fed funds, that's Delta Golf CR2. It's 2-year constant maturity rate. Pull it up on TradingView. If you want to recreate this chart, you just pop up DGS2, Delta Golf CR2, click this plus button right here, type in FED, FUNDS, Foxtrot Echo Delta, Foxtrot Uniform November Delta Sierra, Fed funds. I've got the Fed funds rate changed to orange in my settings. Right there. I've got the DGS2 set to blue. And when they cross, the Fed always kind of chases this rate. So every time they've kind of crossed in the past, we've had some sort of financial crisis. Right now, we have the potential for one brewing, but I speculated all the way back in 2022 that we might go through a period of calm and then have to raise rates more before we actually kicked off the big financial crisis. Now, how long? I just made an educated, wild guess. But conditions right now look interesting. If the Delta Golf CR2, the treasury rate, starts running away, the Fed will have to chase it to keep things under control. And then possibly we kick off a bigger problem. So should be interesting. Stay tuned, everybody. Stay tuned, everybody. And maybe the other threat to all this is maybe the Fed loses its independence, and the disguise of Fed independence causes the 6th or 7th default of the U.S. dollar. And the last default was back when we kind of instituted the Fed. It took the dollar off the gold standard. It was a default, whether you want to call it a default or not. Caused political chaos, or caused financial chaos. So looking at the charts here, how do we make money today? That's all cool and good, but the economy works opposite to the stock market. The stock market works opposite to the economy. When prices are high in the economy, everything slows down. When prices are high in the stock market, that's when things get exciting. Like gold. There's more and more people buying gold as we go higher and higher. Like I said, spiking up 4,800 overnight. Hanging out right here at the all-time high. Be careful out there. One of these little spikes is going to be the last spike. We're tagging that 48.63. Crazy levels. Silver not riding along this time. Gold kind of going out on a limb by itself with a 2% spike. Silver kind of taking a chill. Silver's running way behind, though. If you look at where gold is, zoom out, look at this extension. We're in the stratosphere up here. Everybody's like, silver's gone on this massive run, blah, 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 blah. But really, when you look at it, this pullback in gold, we're up here about to scratch the 2618 extension. 49.64. We'll go look at silver. We'd have to be up here at 500 just to catch up to the move we've got on gold. Is that even possible? I don't know. If you look at Jim Cramer's rants this morning, he's like, is there even enough money in the world to take gold, silver, and maybe crypto higher? Crypto's still suffering down here. Bitcoin and silver were hanging together for a long time, but now silver left Bitcoin in the dust. Gold added $2 trillion more to its value in the last few weeks. Silver pretty much doubled, plus a little. Just crazy. Where did all that money come from? You say it's the multiplier effect, whatever. Does the money really exist? You know, I've commonly said that 90% of the value of these things doesn't actually exist. If everybody wanted to sell at the same time, probably get 10% of the money out, and then it goes to 0. So be careful. Be careful. Crazy numbers, though. Crazy, crazy numbers. And the law of big numbers, as things are at the top of this chart, it is very difficult to double again. Like for gold to double, go to like 9,000, probably close to 10,000. It'd have to add another $32 trillion for silver to get to that magic $500 to catch up to gold. Think about that. It'd be like a 5x from where we are right now, plus a little. That'd be like $20 trillion. I don't know that it can do that. I mean, I don't know. Law of big numbers. That'd be, where does $20 trillion come from to go into silver? So just be careful. This is why I say, like, everything's possible, but it's not very likely. Not very likely. Now, the next fib line up here, 122, that's more likely, and then watch out for a potential retrace. So diving back down into S&P 500 futures, overnight grind keeps pushing us lower. 30-minute roadmap line still way up there. You know, yesterday I was saying watch this 15-minute. As long as we're staying under it, the trend is down. We touched it this morning, but we're still below it. If we get through it, 30-minute is the next resistance up here. And we haven't been there since Friday. Haven't been up there since Friday. Downward price action. Of course, Monday was a holiday, so we've only really had Tuesday and Wednesday. What an exciting week. Still down pressure. Jumping over, looking at kind of a clean chart here. We could take a spill. I don't even know why that fib line started. We could take a spill right down here to the roadmap line pretty quickly. This daily roadmap line. Showing a little bit of green here, a little bit of stability, but that wouldn't even be a surprise right there to go hit that. Pulling this all the way up here to the high. The 618 is right below us at 6,700. And this low right down here. Thanksgiving, we were down here. right here at 6,500. So wouldn't even be a surprise if we go ripping right back down there. Now, the possibility is that we move up, we retrace to a 618, and then go shooting off. So do we hold support in here? Or do we touch down in here? Now, probably this was enough to drop to begin with. We're going to get a couple days of reprieve and then push on down some more. That's more likely what was going to happen. The initial move down is probably, we're probably going to take a day, maybe 3 worth of rest deep here and then push further down. More likely what's going to happen. NASDAQ here. Same kind of situation, except this, ES had a higher high right over here. This ES had a higher high. NASDAQ has a lower high. This is a bit more bearish. This could be the first move down, the retrace, and we could actually see a push further down in here on NASDAQ. Cautionary. If we were to get that bigger, deeper retrace, it would be somewhere down in here. So if we go busting through the 618 and the roadmap line, that could take us right down in here before we find support. So we can see the Mag 7's getting flushed out even more. Big tech. It's kind of the warning showing up in the NASDAQ. Look at the cash index. Just try to glean a little information here. This pullback we did into Thanksgiving, we came up and hit the target pretty solidly. Kind of double tap right there. So retrace back down in here. It's exactly what we probably should do. We're already down to the 4-hour support on the cash index for the S&P. Already down in the vicinity. We haven't actually touched it, but one little spike down can get it. PCE tomorrow can get it. See what happens on that one, but if we get below that, the daily is on down here at 65, and we haven't hit the daily since Liberation Day, basically. Coming out of Liberation Day, so it's been more than a few days. Probably due for a hit. We don't usually go longer than about 18 months before we hit the daily. Russell, on the other hand, still looking spicy, my friend. Still has that 2720 target in mind. This pullback was nothing compared to S&P and NASDAQ. So as far as bullish indexes go, Russell's the king right now. Oil still grinding right here between these two levels. This downtrend of highs, so far, that's a bullish indication by holding above that, not even touching under the roadmap line. If we pop on through, look for a back test of the roadmap line, maybe off of this downtrend of highs, bigger, longer. But this could actually flip us bullish. If we start breaking through that downtrend of highs and can stick it this time, we're due for a rally up to this $100 area up here. It'd be pretty exciting, probably, if we actually do that. That 618 sitting at 101.50. So if we pop up through, back test, it could be, we go shooting right up here, this 101.50 area, pretty darn quickly. That'll cause inflation to go rock and rolling higher. Could be the dollar gets trashed. We'll see. So gold still rock and rolling higher. How high? We kind of have that next fib line up there at 49.20. No, 49.60. Excuse me, 49.60. Right near 5,000. So we may come up short of 5,000. Just be careful. If you're betting on 5,000. Bitcoin took a bearish spill here, broke through the uptrend of lows. This is the first cautionary sign. If we don't get back above here today, we back test it and then start back lower again, probably taking a trip down in the 70s, despite all the other things. Ethereum, kind of same story. We got below the uptrend of lows. This is a big red flag for breaking down and making a lower low. NKD getting a little reprieve today after yesterday's bond massacre. First move down, retrace, watch for the next move down, roadmap line all the way down here. If the Japanese market takes a big spill, it's probably going to take our risk on assets with it, like S&P 500, NASDAQ, probably crypto too. It's a global liquidity indicator for the Japanese stock market. Dollar, still sitting here. If everybody goes nuclear on the dollar and treasuries, this thing will probably push down to that new low that I've been talking about right there. And then watch out for the short dollar trade to end if we do that. Right there. Nice. I was looking for that bounce yesterday. I had that alert on there. Looking at Apple. Hit the roadmap line yesterday. Pretty, and actually pushed through. If we continue lower, this is probably going to come on down to this 618 retrace for the pop that we did last year. We had this low back at Liberation Day. We had this high back here in December, and we've already come down to the roadmap line. If we don't hold on to that, and these highs from last year, probably come down to the 618. That's exactly what we did on Meta. Came down to the 618, and if we don't hold right in here, probably going to push down a little bit lower. Test that some more. Amazon, so far, we're holding on to this roadmap line pretty tightly. Looks like we're going to do another bounce off of it. We can hold on to it. Upside is still 265. If we get below it, though, the stop on this long trade is $1 below this low. And if it pokes on through, we're probably coming on down here to the 190 area. Google bounced off that 337 fib line. Coming back down, probably going to test the 304. We can hold on to it. 385. If we don't hold on to it, roadmap line would be where I expect it to come back to. Right back down here around 260, 265 area probably. Microsoft has convinced me that we're probably coming down here. It's 415, 420 area where the 618 hangs out. Came up there just shy of the fib line. Tried for a second attempt, lower high, and set up the bigger downside. Similar to other Mag 7s. NVIDIA here is a cautionary tale. It can get that continuation too. We've made the move down, tested the roadmap line twice, popped up to the 618 here, held underneath it at 195. Coming back down for the roadmap line again. We poked through like we did on Microsoft. Probably coming back to retest the breakouts that we did from the highs last December. And if we don't hold on to that, the 618 down here at 120. Tesla decided to make a lower low yesterday, wrecked the initially bullish setup. If we can hold on to the 618, same upside, but we wrecked that initial bullish setup there. So now we got to do it again. And if we keep pushing lower, roadmap line right down here, right around 400. Right now, it's looking like we may push down into earnings and then work on a bounce around earnings. Netflix got punched in the face, and look where we are, right at the bottom of the box. Netflix earnings came in extremely positive, but whatever they said disappointed everybody. I guess it wasn't bullish enough. And like magic, we're right at the bottom of the box. Where I said we were probably going after we did this bullcrap right here. Now, this can be the bottom. Like this, that can be the low, and we can rally from here. But I'm not convinced yet because there's no sign of reversal. It's just where we bottomed out back here a year ago. I thought we might hold on to the top of the box, but nope. We, we definitely had some support there, but then we crushed right through it. Now we're at the bottom of the box. If we can hold on to it, back to the roadmap line. If we don't hold on to it, down to 60, and then 20 below that. So I'll go pull gainers. That's things moving $2 or more up in the pre-markets and put them on the gainers list. I go pull decliners, things moving down $2 or more and put them on the decliners list. And then we try to hunt for opportunity here. Now, usually the gainers stay green and the decliners stay red, but we're seeing a little bit of flip-flopping around here today. I also have some setups that I brought that are ripe for an entry today based on my roadmap bounce pattern. So I'll go through those in a few minutes. Keep hanging out. Diving through here. Let's see if we can find anything that's interesting. Lots of gold. Palladium. If this can break through the 618, this could get really spicy to the upside. This may be a bigger opportunity than gold or silver. If we break through that 618 right there, sets up this bigger upside potential on palladium, PALL, PPLT. It's rocking and rolling, heading for that 270 target up there. And what's interesting is we could rock and roll on up to like 400 on PPLT. We're probably going to stall out somewhere around this 260, 270 area. Get a little consolidation before we can push on higher. But the PALL chart is looking ripe for that breakout and then the run. That'll be really spicy. I may do a leap trade on that. I don't know. I'll have to check it out. Oil continuing to get crushed. Natural gas was going on a rip because of this ice storm apocalypse that's supposed to like destroy the South or something like that later this, I guess this weekend, whatever. Some forecast calling for 30 inches of snow here in Knoxville. That sounds ridiculous. It's like posted social media 30 inches of snow. I was like, what the fudge? And then three replies down, it's like, here's my model, and it shows like 1 inch of snow. And maybe a giant ice storm through Atlanta, Dallas, up to 2 inches of ice, they were saying. I don't know. Sounds pretty crippling. And saw another warning this morning about 20 below zero up in like Michigan area. Could mean trees explode, I guess. Sugar maples, freeze the sugar, freeze the maple, explode the tree. So natural gas trying to break out, I guess, based on this snow apocalypse, but we're on a path to make a seasonal low in, this is kind of predicting a February low. And then we'll probably embark on the climb to the December high, then back to the March low in 27. That's the seasonality of natural gas. It's already priced into the futures market. Be careful out there trading natural gas, because when you look at all the natural gas things, they tend to just trend down over time. That's beautiful. Like cold, even though that's ultra short natural gas, trending down. Oil, trending, it's leveraged positive natural gas, trending down. And UNG trending down. So incredibly difficult to make money on natural gas. That's kind of the pro traders, and you probably have to trade the futures if you want to try to take advantage of that. Lots of gold charts. They're all at freaking crazy high levels. Be careful. We're going to get an epic pullback at some point. Probably not today. EQT probably coming back to... Yeah, already came back to the roadmap line. Looking for that bounce. Get back through 57. Take a trip up to 64 on that next move. Barrick. Going for that fib line at 53. Melly. And it's possible it's done, but it did turn down at the roadmap line here. That's caution. If we break through this uptrend of lows, can come down here and make another lower at 1800. ASML gunning for that target. Well, pushed on through 1300. So next upside target, 1650. Man, that was a beautiful reversal right there. Anybody took that, congratulations. I didn't have the cash to do it. That was the target. That was the secondary target. Here's the tertiary target. Right up there. KLAC. Rock and roll. Watch for the resistance at 1660. App loving. Secondary bounce. Similar to what Amazon's working on. Target still up here. 788. GE Veranova probably coming back for the roadmap line. VGT. Let's see. Caterpillar. Wow. That's due for a bigger correction. Be careful. It's kind of a canary in the coal mine. If it starts turning down, things are going to turn sour. And interestingly enough, looks like DE might be set for a rip on higher here. Could be working on a catch up. 20% higher on DE. Coral Weave. Hit the roadmap line. If we can push on through, back test it, that could be positive for going on higher. It did turn down and hit the downside target. So the thing it has in place now is this move up, this retraced to a 618. So this could set up Core Weave. Not saying it's going to do this. It just sets it up. Like we have to get the follow through. We have to break through this 140 prior high in here to get this to happen. Sets it up for that bigger pop right there. Race. Tag the downside target, and if we get continuation down to 300. So the head and shoulders played out to 337. Home Depot. God, this thing just keeps chopping around in here. That did a bearish upside, came back down. Continuation would be for a lower low. Caution. But holding above there, getting through the... Getting through that 618 could tip us on up to 440 right now. See, I saw a couple of alerts come through. Oh, look at that. Duolingo. Boom. Right to the target. Beautiful. So it sets up a potential here. That low, that high, this low. If we can get the bounce through the roadmap line, we could... Holy fudge. Crazy prices. If we can get up through that gap. Intel breaking through. I like it. So it's breaking through the downtrend of highs. That's a long time ago, 2008. Could be setting this up for a trip up here. but we've got to break through the prior high from back in the .com bubble. Look at that. Intel hasn't been higher than it was at the .com bubble bust. But we finally could be about to do it after making these epic lows down here. What else fired off? Thought I saw something else. Nope. All right. Back to it. TSM. Ridiculous highs. Watch out for 380. Baba. Ooh. Come on, baby. Looking for this to get a move up through that 172 and get continuation up here. 200. Arm. Has this head and shoulders thing that if it plays out in full, push us down in the 88 area. PDD. Rejected. Lower low. LU. Let's see. Baidu. How's Baidu doing? Look at that go. Holy sh. A-Web. Not performing. C-Web. Not performing. Not performing. Not performing. So Baba and Baidu are performing, but the rest of the charts are kind of lagging off here. Wheat and precious metals. Ridiculous. UAL about to break out. Go cruising. 129, 140. Next upside targets. Rio Tinto. Nice little pop. So if this thing, it faked out to the downside, if we go ripping, this could be on up to 126 area. 115, 120, 126, 129. It's kind of a big watermelon seed squeeze breakout. Oklo. It's going to have to get through the fib line there at 130 to get 220. Tech. Set up for pop up to 60. AMD. We can stick that move above that 618 right there. 279, 290 on the upside, and possible to push it on up here in the 400 or 500 area. There's your EWI. Skyrocketing. South Korea just keeps being crazy. KORU. South Korea just keeps being crazy. I mentioned FXY. So what a short Japanese yen. WDC. It's pushing through that 215 resistance. Be careful. That's where the prior big move and this big move play out, and we can get a big retrace. That is one solid rip. Last time we did one big solid rip, chopped a little bit, made us higher high, and then took almost all of it back. So be careful on WDC, please. ONDL, 2x leverage on ONDS. ONDS has been interesting. It's hitting its all-time high here. If it could break through, it could have more upside, but if it doesn't break through, probably going to embark on a retrace back down in the $4 or $5 area. Jumping through, looking for charts that are interesting to me. J&J. Yeah, this has a bigger upside potential. 250 to 300. Spotify. Looking for this to bottom in here. It pushed lower than I thought it would, but if it can hold on that 501, break through the roadmap line, we can finally get some upside going here. It's done enough consolidation that 835 to 880 would be the upside. Gibraltar keeps Plummeting down. No bottom in place. Dollar Tree. Boom. Watch for the retrace back to the roadmap line. Possibly even back down to the 90s. And then we set up the bigger move up here to like 400. I did step off of that one at 125. So stuff set up for potential entry today. Boom, 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 boom. Here's the high, here's the low. Entry 94.83 targets. Chart on the statistics. 29.75, 1. Not great. That one, 32.38 targets. PBR. This is already in it from back here with the target up here. 13.83. Secondary entry. Basically the same target. PBRA. This one's different. Here's the entry, target 1296, TIMB. Here's the high, here's the low. Entry, target 2460, VIV. Here's the high, here's the low, there's the entry, target 1354. Webs, not keen on the pattern, but still valid. Target 2515. WCEC. Yeah, it didn't quite come up far enough, but it picked up this little pattern right here on Python with a 114 target, but I'd probably be looking for the bigger target with a bigger move, and it may have taken too long, so 120 would be the target for me if it gets continuation, but this consolidation may be taking too long to play out. So bias for the day. Let's go look at SPY and QQQ. Take a look at QQQ first with the GEX map. GAM exposure. Oh, we have a nice fat level building in here. Nice bubble showing up in here. Now, caution, we've got this 595 level building down here for the end of the month. And there's a big red bubble in here. But we're in the green bubble. That kind of mutes price action. We could see a rally up to like 618 today. Things keep being effervescent, pushing up into this green. Market makers trading against us. So as the higher we go, the more hedging happens against it. It kind of mutes the price action. If we get down to the red, watch out. There's some big levels down there too. So nothing super clear on QQQ GEX levels. Taking a look at the we're hanging out at 612, so yeah. Big level at down here at 600, big level here at 610, and we may hang out up in here. There's not a ton of calls played on QQQ, so people not super bullish on QQQ. Now SPY. One, type the right letters. Go back to the heat map. Please load. Got a big level down here at 680. Not much of a bubble formed. Wow. And we're just right at the bottom of this potential bubble up to possibly 686, it looks like, on SPY, but then we have a big level down here at 6. So probably going to cap this in here from 678 to 687 today. Let's go look at SPY. We talked about the fact that we could come on down to the roadmap line here. But for today's price section, probably capped in here from 678, which is right where we bottomed out yesterday, up to about 690, which is where the 30-minute roadmap line is. So we're probably going to hang out in this zone today, more than likely. That would be where I expect us to hang out today. QQQ-wise, see if we can figure out anything that might help out. That was the kind of the bubble from yesterday. Looks like we have up to 618 today. Maybe 619. That should be up where the 30-minute roadmap line is kind of hanging out there. And then down to 608, which was down where we had the bottom yesterday. So there's your kind of range for Qs. Looking out into the end of the day. We're kind of in the middle of the bubble here, so that could be a level that we respect. But we could also come up and hit that 30-minute roadmap line as it pokes down into the box before we push lower. Let's see where the 15 minutes hang in. Yeah. So the 15 and the 30 are in the same vicinity up here. Right around that 618 a little. Funny, that's right where the top of these bright levels are hanging out right now. So I'd watch out for a pop up there, and then we may be able to hold on to that. And that's what we're looking at today so far. So I'll be on Market Masters 11:30, about an hour and 15 minutes. If you want to come hang out, see what else is cooking today, what other opportunities might be to make money with Jack and I. And otherwise, I'll see you tomorrow. Same bat time, same bat channel, 9:15 tomorrow. We'll hunt for opportunity again. Have a great day, everybody, and we'll see you later. Bye for now.